Good morning and welcome back to Almus Market Mornings. Amidst a period where currencies have largely remained range bound and focus has been on precious metals, a big move happened in the rupee yesterday. The central bank intervened pre market and then the market continued to sell dollars. Many articles have been released and there has been references made to clearing the speculative attack on the rupee. Whatever the case may be, after a period of trading in a very narrow range, this move is like the tide going out and you hope you are wearing your trunks. Uh, Good morning, JK. Everyone is interested to know what is going on with the rupee. Are we going to see some more turbulence in these moves ahead?
Good morning, Swaraj. You spoke about rupee being trading in a narrow range for a long time. So I just recall our macro report on 9th October, where I have specifically spoken about how it was in a narrow range of 5 to 6 paisa, and the implied walls had fallen to 1 year low at 3.10%. And we had advised everyone to buy options. If it were exporter put option and importer means call option, and now we see the spot has moved by 1.5%, and the implied walls have moved up from 3.10% to 5.75%. And the narrow ranges are always a precursor for a big move. That is what I'm trying to say, and that is exactly the time or the situation which RBI acted upon. Market was somewhat long because the news flow was not supportive of rupee. FI flows have not been positive, and the rupee had continued to underperform, including our stocks for the most part underperformed in the last 12 months, returning negative returns versus majorly good returns from other markets. But I think RBI acted at the right time. They had intervened just before the market opened, and we had been hearing about their action even in the offshore market. And this is not a new thing. On February 10th this year also, similar action had been seen when rupee hit 87.95 for the first time. And so that was followed by another action on retracement to 87.50, and all the way the spot had dropped to 83.76, if I'm correct. And this was also post the Operation Sindoor. So what I'm trying to say is that markets had a setup where it could see a big move, and since it had already underperformed, and the rupee had been undervalued as per RER terms as well, and that was something that we could not ignore. So there was a good effect of RBI intervention yesterday, and as it turns out, this there is also seemed to be some positive news brewing. No, there's no confirmation yet from official side, but some positive news brewing on the trade side as well. We've been hearing some market talk, nothing official, but only one thing that I came to know, or rather came across, was Trump saying India will stop buying Russian oil soon, adding that Mr. Modi had assured him India would not purchase Russian oil. This has been quoted in Financial Times. But I have not found any word from the Indian official side. And it is such an important issue as far as India and Russian relations are concerned that, it may be not easily forthcoming. Yeah, there, of course, there is no denial nor agreement as well. So that's something that the market will have to mull upon. But definitely, I think after moving 1% down yesterday, again, the market has gone, seen the dollar rupee go down further towards 87.70 in today's trades. But it's not just the Indian RBI action that has been responsible. We have seen the dollar index once again move down after failing to cross 99.50. It's now around 98.70 as well. Euro has bounced from 1.1550, where it has found strong support. Some positive news emerging from French political side also helping. There is also some data from US which points to Fed possibly getting a bit more dovish. This was the Beach Book survey that the Fed regional Feds publish. So then there were the RBI governor statements which strongly hinted at attacking the speculative positioning in the market, and this is more often seen in the Indian market whenever there's a speculative position, particularly in the offshore market. RBI has acted to get the same unwound, and although governor continues to say that they don't have a specific target in the mind and they only want orderly movement. That's a standard statement that we have always heard from RBI. But that said, I think now that even the dollar index has been weaker, and we are seeing some technical breaks on the USD INR below 88 as well. I think this move can sustain for some time. We're not in for any major down move. I think 87 at the best is what I am looking at. While the rupee was on an appreciating trend during the day, we also had disappointing trade data from India for September, where the deficit has soared by 21.36% month on month, standing now at 32.115 billion. Now, that did not really stop the rupee from gaining further, because we anyway expected the trade number to worsen due to the 50% tariff that India has been slapped with. And the data shows that there is a 12% decline month on month as far as Indian exports to the US is concerned. That is, in dollar terms, it's about 5.5 billion. But the major factor is, the silver import rising by 139%, and gold import rising by 107%. So these are very big numbers. And good thing about this is that this is a cyclical thing, and as and when the seasonal demand and also the gold and silver prices stabilize, this is not going to be continuing. So which means that this 32.15 is not something that is going to stay constant. It may moderate going forward. So, and in any case, higher trade deficit has been discounted in India due to the tariffs. What market look forward to is that if the statement about India stopping Russian import of oil is correct, and then we might well see a situation where the 25% penal tariff on India could well be removed immediately. So, with the forward-looking market, I think this deficit was not an issue for the rupee to strengthen. So, no, conditions have been good for rupee to strengthen a bit more. What we would probably like to see is if the FI's numbers also turn positive, which has not been, at least not negative, in the last few days. So overall, it's looking good for the Indian rupee to retrace, its much longer seen underperformance, and of course, the importers would be happy to see that coming down as well. For exporters, it's still not a very low rate, even above 88. So if we do get above 88, exporters should be hedging. On the global side, the dollar index has weakened, as I said, with some retracement, a rebound in the euro by almost 0.8% in the last session, and even the yen has strengthened. Some statements about yen strength on by Secretary Besant, hinting at monetary policy in Japan being too low. So some of these statements are also helping out the dollar index to go down. So the precious metals, of course, are the leading indicator for dollar's weakness, which is ongoing. So conditions are in place for the rupee to sustain its current strength. My assessment is that it may not see too much strength beyond 87. Market positioning has been too much on the long side, so the unwinding plus re-entry of exporters at slight retracement is going to help it sustain. I broadly feel 77, 78. I'm very sorry. 87, 88 is the range that should hold for some time. That's it, Swaraj. Thank you.
Thank you, JK. And of course, it was all about the rupee, because the kind of move we are seeing, especially even JK has highlighted multiple times, even during this podcast, that all this narrow ranges, they precede a very large move. And we have discussed this numerous times, and RBI finally seems to have taken note of the excessive speculative positions and intervened very aggressively. Even for a change, the RBI governor made a statement on the rupee. I think, JK, if I'm not wrong, this statement, it's coming after a long time, right? I don't recall the
Yes, this
preceding
is.
governors making a statement specifically on the rupee.
So the specific reference to rupee outside of monetary policy. On the day of monetary policy, he had mentioned about the rupee
Mhm.
volatility
Hmm.
and said that they will consider appropriate steps, and that was a very vague statement.
Hmm.
And but yes, yesterday in the wake of the movement that happened.
Hmm.
I think this is significant. So, which means that RBI is quite vigilant about what's happening on the rupee.
Hmm. 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 Right. Right. So sort of a verbal intervention, like how BOJ does.
Verbal intervention preceded by actual
By,
intervention.
yeah. Yeah. Exactly. So broadly, 87, 88 is the range to look out for USD INR, and we'll keep tracking how this story evolves.